And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon, traders. Welcome to the recap. Wednesday, August 17th. John Hoagland, thanks for trusting me with your time. Well, our equities have had a little bit of a pullback today. Nothing too scary, I don't think. As always, we're just going to take a look at what they did today. Take a look at the charts. Take a deep breath. Day's over. Hopefully it was a successful one for you. If not, hopefully you learned something. Well, either way, I hope you learned something. But as far as the S&Ps are concerned, down about 29%, not officially, but about 0.7%. NASDAQ down 103 points, down approximately 1.2%. And the Dow futures down 154, approximately 0.45%. Well, aside from the economic numbers we had earlier, we did have a couple of we had Michelle Bowman talking today. We also had the Fed minutes come out just to kind of take a look at some of the information that was made available for us on the Fed minutes. Apparently, all the participants were in agreement of a 75 basis point rate hike. Officials anticipate ongoing increases for Fed funds rate, so we're not done raising rates yet. Some said the rate would have to hit sufficiently restrictive level and remain there. Fed officials, some, I guess, saw a slower pace of rate hikes at some point. Officials say move to a restrictive policy stance required to meet the dual mandate. Participants emphasized that a slowdown in demand would play an important role in reducing inflation, so they want us to stop buying stuff, apparently. Where did we go here? U.S. rate futures price in a higher probability of a 50 basis point hike in September to nearly 60% post-Fed minutes. Okay, so we did have one of the Fed members, Bowman, talking today. She said, and I'm not a fan of this, I'm sure many of you are probably not, but she said some retirees may feel compelled to return to work due to inflation. All I can say to that is, boo! They've worked enough. I'm not retired yet, but hopefully I will be one day. But I enjoy what I'm doing too much, and I'm not sure that I will be retiring because I like it so much. Bed Bath & Beyond today continued its route to the upside, up another 26% today, as our Reddit traders keep squeezing the short sellers on Bed Bath & Beyond. Hope again you had a good trading day. As always, if you like what you're seeing, hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome, as well as love here on the recap. Subscribe to our YouTube channel. You can get notified when we do go live. Tomorrow we've got the market forecast. We also have Make Hoag Money tomorrow again, so I'll look forward to seeing you all there. If you attended the group coaching today, I thought a very robust, busy session today. If I didn't get to your question, I do apologize, but keep coming and keep asking those good questions. A lot of really, really good questions today, so thanks to all of you who attended, and if you did attend, hopefully you found something useful for you. What else do I have? I'm going to say good afternoon to everyone. Scott saw, and he conquered today. First in the room, you win the prize. Tachyon, down 55 for practice. Got a handle on Pitchfork. Good. Still need clarity and tighten my trade entry and exit rules. Jerry is awake. Hello there. I hope I'm awake too. Dan Trader, Vince, good afternoon. George, good afternoon. George, if you saw the forecast this morning, Lacey was giving me some love right at the beginning of it. Frederico, good afternoon. Haggle Matters, good coaching. All right, excellent. I'm glad that you enjoyed it, Haggle Matters. Tony, happy midweek. Happy birthday, Tachyon. Yep, it's Tachyon's birthday. Chilling with Dylan. I hope everyone had a great day. Jackalope Hunter, big green day. Nice. And when I felt like I was over trading, I said, nope, close it down, walk away with the win. Nice job, Jackalope. We're all proud of you for that. Keaton Rodriguez starting to find success trading MES in the longer time frame this week. Good. I always like to hear that, Keaton. You know, I think a lot of traders trade in a very short time frame, and you might find better success extending those time frames. So I'm happy for you, Keaton. Matt Reed, hey, how are you? Hello all, good day. Hope all had a great day. DA, Dr. VJ. Dalton is still going strong, and his trainings are not cheap, so I have a long way to go, sir. Thank you, Dr. VJ. Everybody's saying happy birthday to Tachyon. Very nice. Rusty Golfer, my spirit animal. Green Day, I'll take it too. I would take it too. So, yeah, again, hopefully you had a good trading day. It's time to just sit back, relax, ponder what happened through the trading day. I know we've got the crude oil came out, the EIA came out with a pretty shocking drop in oil and gasoline stocks here in the U.S. The EIA said a 7 million barrel drop in crude stocks and a 4.6 million barrel drop in gas. The knee jerk was to the upside, but really that rally kind of faded and we fell into range as the day went on. Even the S&Ps, both indices take a break from the rally. The ES tops off at the weekly kickoff high as investors mull retail data. Gold gets its look down to weekly kickoff low and then finds support, and then buyers come in very late in the session. Past the regular trading hour session is when those buyers finally found their way into that long in gold. If you took that long at weekly kickoff low, remember everything is a zone. We're going to see this on the charts shortly, but you had to wait a very long time for those buyers to come in and start pushing that market back above or away from the weekly kickoff low. Euro, low volume, keeps value constant. The 10-year, no gap close, brings weekly kickoff low even nearer, value lower, moving slowly towards that weekly kickoff low, which again could provide some decent opportunity. And the natural gas rally takes a little bit of a breather today. Value, however, still remains higher. Even if the day is largely to the downside in regular trading hours, you can still manage to bring value higher. And if you're watching value, it's very, very important. Michael, what time and when are the coaching sessions? The coaching sessions are on Monday and Wednesday at 1 p.m. Central. I'm going to put a link into the chat here that's going to give you the ability to register, and it'll even give you an email an hour beforehand to remind you of the coaching sessions. Tomorrow is Make Hogue Money, and this link will take you to the link to join up with Make Hogue Money. That's tomorrow, right after the market forecast, approximately 8:20. We try and get that thing going. Made a little bit of money on Tuesday. Looking forward to seeing what we can come up with tomorrow. It's not me coming up with the trade ideas. It's you. And you're going to make me money. You're welcome, Michael. All right. So I guess we should rifle through the charts briefly here so we can just take a look at what we were thinking this morning and how things played out for us. We are going to be trading October crude tomorrow. No questions, no nothing. So here's the daily. I mean, we're right in the middle of this channel. weekly kickoff low here is not meant to envelop trade at any given time. It's meant to be an area where longer time frame traders might be interested in adjusting inventory. And I find it very interesting that during rollover, we're right at a weekly kickoff level. This weekly kickoff level, I think largely because of the fact that it's rollover day, is the reason why it became somewhat magnetic today. Very low confidence in this market in any direction. We have long shadows above and below the candle bodies yesterday and today. Here's what happened when we had that shocking drop in crude stocks and gasoline stocks. We opened, we had a pretty good knee jerk to the upside. And then we just kind of fell back into range. We never really left value from yesterday. And this weekly kickoff level is somewhat central as far as range is concerned. I think if it wasn't rollover, we'd be a little bit more directional. But as rollover kind of fades away as the week goes on, we'll be keeping monitor of more directional activity and hopefully away from that weekly kickoff level. Here's the E-mini S&Ps. Mentioning for the last couple of sessions that the upside auction seems to be getting a little bit tired. We only added about 1,500 contracts in open interest yesterday on this last push up to weekly kickoff high. The overnight high last night, exactly at weekly kickoff high, and we got a little bit of a pullback here. Now, one of the things that I will be looking forward to tomorrow morning is to be able to check the open interest. If we lost open interest on this little push to the downside, I'm not that concerned. I think that the upside structure is still largely intact, if you will. And, well, let's take a look. I mean, the inflation snake snuck around and smacked us in the head a little bit today, but I don't think the damage was all that great. Here's what we did. Overnight inventory to the short side. Our late rally here may have somewhat been involved with some shorter time frame traders bringing price back to where we started the overnight last night. And then, of course, price kind of fell off. But did we really do a lot of damage here? I don't think so. Look at that high last night, 43.15, exactly at weekly kickoff high. We're gonna be contending with that level again very soon, I have a feeling. Nobody knows for sure. Nobody can say 100% what's going to happen. I don't think the damage we did today was too bad. We did have 5 straight, 1, 2, 3, 4, 5 straight up days, increasing open interest. I don't think we've done that in quite some time. Let's take a look. 1, 2, 3, no. 1, 2, 3, no. 1, no. 1, 2, 3. 1, 2. 1, 2, 3. 1. 1, 2, 3, 4. I don't think we've seen that since, well, maybe here. 1, 2, 3, 4, 5, 6 straight days. That takes us back to March since we've seen 5 or more straight up days. So we took a little bit of a break today. I want to see open interest drop. I want to see this look like nothing more than a little bit of profit taking, if I had my druthers. NASDAQ, very similar. We don't have that weekly kickoff high to top us off yesterday, but largely, the same thing, just a pullback. I'm going to be looking forward to seeing if we do see open interest drop. This morning I mentioned that this 20% off the all-time high, 13,414, might be interesting for an opportunity for an execution today. It did get somewhat through there. Almost looks like this number should be a little bit higher than that. It did get somewhat through there, not even 10 points. And remember, all these levels are intended to be zones, not finite. So pretty decent. Gold. Finally, we get an opportunity near an important inflection level. That level being weekly kickoff low. You can see it got 1773.90. 75 was weekly kickoff low. We went 11 ticks below it and then rejected. Here's what it looked like on the 30-minute chart. We open with a gap, we close the gap. No acceptance inside the gap. The market turns down and goes and checks that 1775 level. Should be right about here. 10 ticks through it. 10 ticks through it again. Can't hold there. Finally, after the close, the 1 o'clock bar, it actually brought in some volume after the close. And off to the races we went. Finally, we found the buyers that I was looking for earlier off that low of that weekly kickoff level here. I'm going to get this straight here. I want to make sure I've got the profile correct. So regular trading hours in gold usually closes at 12:30. It wasn't until the 1:30 bar, 1 o'clock bar, where price started moving higher. And what happened at 1 o'clock? The FOMC meeting minutes. So a little bit of a move from the FOMC meeting minutes. Here we are. The euro value a little bit lower than yesterday. Range a little bit higher. Is there good opportunity here? Well, the market did get to this point of control. I'll have to extend that over there. But it targeted it visually and turned around. Overnight low, we looked at, I think, this morning as an interesting area. Got a little bit deep below that, but on the returning to it, it's that look below and fail. The 10-year. Going to go back to the daily. Structure break. Balance, or are we breaking structure now to the downside? It would make sense to me. Here's what we did. We opened with a gap, no gap close. We try and trade in the direction of the gap by selling strength. Kind of a tough day. And even the Nat Gas had a pullback today. We were wrestling with that previous weekly kickoff high up here as we started the day, and looking at on the forecast, things just petered out. How was volume? Low? Well, at least lower than the previous day. Watch open interest. If we lost open interest, this is just a pullback. Opening, looking higher. Back into range. Didn't quite finish the value area special situation play, and we did not in the S&Ps either. We were talking about that in the group coaching session today, where we opened with a gap. We opened upon acceptance inside the previous day's area of value. The value area special situation play comes into play. We talked about the first time I had heard about this, and the basic rule that I learned at that time was I needed two 30-minute bars to close inside the previous day's value in order for it to show acceptance. We had one 30-minute bar close inside value. We did not have a second one. That kind of negated the idea that the value area special situation play was actually in play. We tried to get there. We couldn't quite do it. And look again where this market traded to. This market opened here. All of these overnight shorts, a lot more participation, and back to where we opened. Was that a value? Was that a overnight inventory adjustment? I'm going with no. I think we actually brought in some buyers that brought price back up to that level. It's going to be interesting again, and always is, to see what these markets are going to do tomorrow. Thank you, Ocean Blue. Sneaky, right? That gold move. But it was at 1 o'clock, so it probably had something to do with what the FOMC minutes we're talking about. Matt Reed, any chance you could give a 60-second open interest lower, higher than the Dex and explanation for new guys like me? Yes. Matt, when we are thinking about any market, we're thinking about something that is part of an auction process. Okay, so when we think about an auction, let's say I'm going to auction off this piece of art behind me, and it's a very popular piece of artwork, and it's original and all that stuff. And I'm going to say, all right, we're going to open the bidding at $100, and I'm going to go. The auction is open, and if everybody in the room wants to buy it, price is going to move very quickly higher. It's going to go 100, 200, 300, 350, 400, 450, 400, 500, 550, 600, 650, 675, 700, 725, 750, 775, 800. Now, you can feel that auction because fewer and fewer people are into it. You can feel the auction kind of tiring to the upside. So if I'm a good auctioneer, I'm not going to say sold at $800 that quickly. I'm going to say, now remember, this is a very important piece of artwork, and I'm going to start talking up the artwork again. I'm going to pander and try and encourage the next person to take that next step to pay just that little bit higher. I might say this is a very important piece. It once hung in a very important and popular trader's office, if that's going to help. And so you may entice some more buying to come in. And sometimes more buying begets more buying. There may be somebody in the back of the room that wasn't even bidding for it before that says, I'll pay $900 for it. So that jump is new business. That might spur more volume to come into the upside, because now everybody in the room that was bidding for it is looking back saying, what does he know that I don't know? If he's going to pay $900, it's got to be worth more than that. So he may actually continue the market moving to the upside. Now that's volume. Volume drives price. More volume, faster price goes. Open interest is the amount of money that people are putting into or taking out of a specific product. So, going back to the charts, we have been watching since the high here, the beginning of the year, for really good auctions to the upside. All of the auctions to the upside that we've seen since the beginning of the year have been hollow. What do I mean hollow? It means that instead of new business coming in and putting money on the long side, we're just taking out or short covering, basically taking profits from the move to the downside. Well, all these moves up, most of them were losses in open interest instead of gains in open interest. Most of the moves to the downside were showing gains in open interest, which means money is coming in to the short side. So you pair open interest increasing with increasing volume in a particular direction, that is a healthy auction that's likely to go in that direction. Now, there was something that happened here on Tuesday, the 19th. We started to see open interest increasing on up days. That was a change. All of these rallies that we've seen have been hollow. In other words, they have not brought in new business. They've been getting people out of old business. On this day, we had a pretty decent jump in open interest, and I, basically said, this is different. This is something that could change things for a period of time. So on that day, because the open interest increased instead of fell off on that day, I said, okay, not only that, we broke out of balance there was pretty decent volume. Upside doesn't really bring in huge volume in equity futures. That's something I've had to just get used to. So we had decent volume. We had more volume than the previous day, and we had a big jump in open interest. Aha! And we broke out of balance. So that had me kind of thinking, instead of looking for opportunities to sell strength, I think I should start looking for opportunities to buy weaknesses. There was a paradigm shift that occurred on that day that said, okay, I'm done selling rallies. I'm looking to buy breaks now. And it's been, paying off ever since. We've got really, pretty good upside structure here. There's weaknesses in structure. There always is. But we've got, a move up, balance, a move up, balance, a move up, balance. If I were to, say, put a box around this area of balance and put a box around this area of balance, and I could put a box around this. Well, we don't really care about that little area of balance. We're moving higher. So we had this area of balance and there's space. There's this area of balance and there's space. If we fall into balance here, we also will have space. Space, the final frontier. We have balance, direction, balance, direction, balance. When we start to see the areas of balance getting closer together or overlapping, that can really be a change. But you always want to be watching that open interest as well, because the open interest and volume can give you an early hint of a potential change in market state or direction. If we really lose volume on this move to the upside, and if we start losing open interest even on up days, that's telling us that the auction is tiring. There may be a change. Now, with equities, it's It's with equities, volume is never all that great heading to the upside. All right. I hope that's a good, healthy answer for you. I forgot I have a meeting that I have to get to now. So get some rest. Be kind to yourself. Be good to others. Say a prayer for world peace. Find peace within yourself. Blessings to you all. I will see you tomorrow morning on the market forecast. Trade well tonight. Make sure you save a little bullets for tomorrow. Hopefully you have a good night tonight.